Yeah, so good afternoon, everyone. I do see at least one familiar name from another program. So I am a farm business management educator with Michigan State University Extension. That's my title. So basically, I work with farmers either in groups or one-on-one on their finances, on setting up a good record keeping system, analyzing their records, making management decisions out of the information that they have collected. So yeah, that's a little bit of what I do. And I cover 12 counties in West Central Michigan. So I've specialized due to my location, due to my personal background, I've specialized on working with smaller farmers, specialty crop farmers. Many times that overlaps with beginning farmers and with historically discriminated farmers as well. So that's kind of like the space where I tend to work. So if you all can hear me and if that's okay with everybody, I'm just gonna go ahead and get started. I prepared just 15 slides. So I'm hoping this gives us time for discussion, for showing you some things on my screen. So I'll get started so that we have time for all of that. So I'm gonna turn on this pen. Hopefully that will allow me to show you more stuff if I need to. So today we'll try to do an A to Z, like from the basics to more advanced, but we're going to focus on the basics. But I just first wanted to give you kind of like an overview of what you can do once you get more advanced. So very quickly, we tend to think of farm records in terms of levels. And we usually separate it into 4 levels. The first one is taxes, like putting together your income and expenses so that you can file taxes. That's the first level. Level 2 is financial, basically writing your balance sheet so that you can apply for a grant or a loan or other sources of financing. And then levels 3 and 4 are definitely more advanced. Basically what we do on levels 3 and 4 is we put together your tax information or your income and expense information and your balance sheet, and we create an accrual adjusted income statement. So we try to align your production activities. Sometimes what happens with farmers is they make purchases at the end of the year that are actually going to be for their production of the next year. And so we try to make adjustments so that we come up with a net farm income number that really reflects the activities for the year. And so that's a better tool for making decisions than the cash income and expenses that that we are reporting when we file taxes. So that's kind of where we get when we go to levels 3 and 4. Level 4 is for individual units, so enterprising. Okay, so that's like an overview of the levels. Oh, and the other thing that I have a note here is ex post and ex ante. Each of these things, like if we're going to be making a list of income or expenses or a balance sheet, or all of these things can be done both looking back at your past year or past years, or looking forward at the next year or next 3-5 years if you're trying to make a projection. But basically, the way we think about things is the same. Okay, so when we so record keeping is the art of managing an organization's financial information throughout its life cycle. It really is an art, and it's complicated, right? As you all may be aware if you've tried. But there's typically 5 activities when we keep records, and these apply to each of those 4 levels that we discussed before. So first, we try to classify financial information. We try to put it in boxes, whether it's, our income or our expenses, or which of our income accounts or categories as specific transaction goes into, or if we're writing a balance sheet, okay, well, is this an asset? Is this a liability? And we'll talk a little more about that. But basically, we first try to classify information. And then the other thing that's important and that we need to do is store evidence. So when we are doing record keeping of our daily transactions, that's in the form of keeping receipts. That's an IRS requirement. So it's not just making a list of our transactions, it's also having the evidence that those transactions actually happened. And when we're doing a balance sheet, that's the same. Well, if we're going to put an asset in our balance sheet, if we're going to say, well, I own this house, well, do I actually have the title for this house? Where am I storing that? That's important for succession planning. Like, what if you die? Type thing. I know it may seem unrelated to record keeping, but it's not. So those are the first two steps. And then there's balancing and reconciling. And again, whether we're writing a balance sheet or a summary of our income or expenses, we want to make sure that things add up. When we are doing income and expenses, that looks like, okay, so if I had X amount in the bank or in my pocket at the beginning of the month and I spent this amount and I made this amount, then that means that I should have X at the end of the month. Do I actually have that amount, or there's a discrepancy, and how do I fix that? And same when we're writing a balance sheet. When we're writing a balance sheet, we make a list of what we own and what we owe, and the balance sheet has to be balanced. And so that's basically the same concept, that our what we own equals what we owe plus our equity. I'm not going to go into too much detail on that, but there's that concept that things have to balance again. And then once we've done all of that, then we're able to generate reports and analyze those reports to actually make decisions. So that's where the fun or useful part of all of this starts. Okay. So a little more into accounts. Accounts are basically boxes or categories that we're going to put things into. And there's 5 types of accounts: expense and revenue, and asset, liability, and equity. Expense and revenue are the ones that we're most familiar with. What are some examples of revenue accounts in a farm, in your farms? Where does your revenue come from?
Would you like people to open up their mics and let you know, or drop it in the chat, or mics?
Yeah, whatever works for people. If they don't want to talk, we're not going to force them either. But I just thought that was an easy one that people could really think where their money is coming from.
Farmers markets.
Okay, so selling your produce maybe at the farmers market. Great. Other examples? Okay, but revenues is our income, basically. Where does that come from, right? Okay, expenses. Does anybody have examples of what expenses you incur as a farmer typically?
My water.
Water. Okay. Other utilities could be expenses as well. Depends, right? But okay. Angela, did you have an example?
Oh, just labor, possibly, if you have to hire help.
Mm-hmm. Yes. I actually had labor just under here because and I'm sorry, like I'm not very good at writing with this, so things take weird shapes. But labor is an expense category, but it's one that is different than other, like you need, if you're going to be hiring them, you typically will need to collect or pay for their FUTA, their SUTA, it's more complicated than other types of expenses. So yes, that's a good example. And it's an example where things start to get a little more complicated in a place where people sometimes consider outsourcing only the labor part of their record keeping to somebody else that can keep those records. Sometimes people do that. So yes, great examples. Then I had, okay, so let's first go to asset, liability, and equity accounts. So I'm not going to bother you too much, but assets are things that you own. Could be inventory, could be seed. Something as small as seed is part of your assets. Or it could be a tractor, something bigger. Liabilities are things that we owe. Debt could be to a bank or to a person. But that's basically what liability is. And equity is basically what we can walk away with free and clear. If you paid off all of your liabilities, the difference between assets and liabilities is your equity. So that's, and these two make up your, income and expense summary. And with these, we create what we call the balance sheet. And then just a couple other examples of things that can be tricky is depreciation is something you may have heard about. It's an expense, but it's a non-cash expense. It's more like a theoretical, or it's a way we split the cost of bigger assets throughout their life cycle. So if I spent, I don't know, $50,000 in a piece of equipment, and this piece of equipment will last, say, 5 years, then I can split that expense as $10,000 in each of those 5 years. That's the concept of depreciation, and it's an expense account, but it's a non-cash expense. Then loans is another tricky one, because interest on loans is an expense, but the principal part of a loan is a liability, and that matters if you're writing a balance sheet. If you're not writing a balance sheet, then all you really care about if you're paying back a loan is your interest. So you need to be able to keep records in a way such that you account only for the interest part. And then personal expenses or personal income, we try to separate that from the farm income and expenses. And so that's why I have that there, just as a reminder that we want to set up a record keeping system that lets us separate things out. There's ways to do that. One fast and easy one is get a farm credit card or a farm bank account. Okay. Then when we are entering transactions in our record keeping system, the things that it's really important that we keep track of are dates, amounts, and accounts. The accounts is those categories, right? It could be for every farm is different, but and then there's other things that we usually like keeping track of, but are a little less important. For the account, though, do I have that here? Oh, so here, Schedule F, which is the farm tax form, and I'm not going to go into detail on taxes, but this is a nice place where you could get a list of accounts that you need to keep track of for taxes. So if you don't have a list of categories that you're keeping track of yet, if you Google Schedule F, IRS, that will basically give you a list of income categories and expense categories. That's a nice place to start with your chart of accounts, is what we call it, is that list of things that we're keeping track of. Other places where you can get ideas of what things you need to keep track of are TellFarm. TellFarm is a record keeping support program from MSU. And that does have a cost. It's like $600 a year, but it really holds your hand throughout your record keeping journey. And it lets you do tax estimations and financial analysis. So it really helps you move more to the higher levels of record keeping faster. And it supports QuickBooks desktop for now, and PC Mars. That's another record keeping system I may show you in a little bit. But the farm records book is I'll show you the farm records book, but it's a spreadsheet, and there's a paper version of the farm records book as well. And this is based on tax accounts or tax categories. So it's nice that they already give you that. And another source of what things should I be keeping track of is talking to a farm tax preparer. If you don't have one yet, having a tax preparer that understands farm taxes is important. And they can give you ideas of what to keep track of, how to keep track of things. There's a list of people in the state of Michigan that go through MSU's income tax school. There's a specific farm income tax seminar that they can take every year to stay updated on farm taxes. And there's a list on the MSU website of those tax preparers that go through that program. So you can find somebody in your area that you know has taken that course if you want. Okay, so once you've done that work, then you can start creating some things. And again, here I'm going to focus on income and expense summary reports. So it's that first level, summarizing our income and expenses. And again, we can do this as ex post or ex ante. That means that we can be looking at last year or past years, or we can be looking at projections of what we think future years are going to be. And so the first simple thing we can do is just summarize our income and our expenses. And the difference between income and expenses is our cash income. It's not a great, like I said, it's not aligned, it's not adjusted, but it's our cash income. And that's a very important piece of information to have. So that's the first thing that you can put together once you've collected all of the information from those transactions. The second thing you can do is you can move to a cash flow format. So instead of just having a summary of the information for the whole year, you can put that into months or quarters. And that will give you an idea of, okay, well, I may have made money or some amount of money throughout the year, but I may have made all of that money in the month of July or in the summer months. And what if I had a loan that I had to pay every month, and maybe in the winter months I didn't have the cash to pay that loan back? So the cash flow format or the cash flow statement really lets us look at whether we are able to cover for those loans or expenses that we may have every month of the year, not just the months we have income. And then, so once we've put together that cash flow statement, then we can do some more analysis. We can see how much of our cash flow is coming from operating activities, how much is coming from investing activities, from financing activities. Basically, are you getting most of your income from perhaps interest? Well, that's great that you get interest, but you want most of your income to come from your operating activities, right? So this lets you look at some bigger categories. And again, here we are always going to be reconciling beginning and ending cash to make sure things are jiving. And so these are income and expense summary reports that we can put together, looking back or looking forward. And we sometimes call this our startup budget would be a form of this, right? Just a different name. Okay, so we usually talk about the enterprise budget too, right? It's a question that everybody wants to answer. Okay, how much am I making for each of my crops? Am I making more? Should I grow more tomatoes or more lettuce? Or which of these things that I'm doing is actually yielding the highest return? Again, these can be done ex post or ex ante. And another piece of information that's useful to have is our break even points. But let me go in order. So if we're going to be making an enterprise analysis, again, looking back or looking forward, let's assume we're making an enterprise budget. So we're looking forward. We can calculate our yield times our price. That's our estimated revenue. And then we can subtract some costs. And we can just subtract operating costs, or we could subtract some other costs. So ownership costs, what's our depreciation for that machinery? I can assign a cost that may not be a cash cost, but it's a cost of owning either machinery or land or other stuff. Typically, we look more at land and machinery for the most part. And then management, like my cost of the time and effort that I'm putting on this farm. So we can, we can first consider operating costs only, but as we try to make this more as we try to adjust our estimation and make it more accurate, we may want to add these other costs. Once we subtract revenue or cost from revenue, we get our profit. And when we're doing enterprise analysis, then this will be our profit per acre of strawberries or per acre of blueberries or per pound of strawberries or blueberries, depends what unit we've chosen for our analysis, but that's basically what we get. And then we can calculate our break-even points. Okay, so what was my cost? And if I divide my cost by an estimated price, that will tell me what yield I need to get, or how much of my production I need to sell to be able to cover my cost. And I can also get price. So, okay, so if I am able to select my price for my product, then, okay, I got this yield, or I think I'm going to get this yield next year. Well, I divide my cost by my yield, and that tells me the price, the minimum price that I need to charge to cover my cost. Anything above that will be profit. And we obviously, again, that's why it's important. Because if we, where's my pointer here? If I only considered operating costs when creating that cost, and I'm using that here, my break-even price will only cover for operating costs. But if a piece of equipment breaks down, then that price will not really have given me the cushion that I need to replace machinery, or it may not be paying my cost of living. So that's why those three different types of costs that we want to consider are important. And here again, my break even can just be for covering costs, and I can just consider my fixed and variable costs, or I can get a break-even number that will help me maintain net worth. And so then I need to add some more stuff to that cost value that I'm calculating. Any money needed for debt interest, principal payments, if I have equipment that I'm paying back, family living expenses, taxes, and for meeting cash flow demands. So again, the more you add to that cost, the safest your break-even number will be. But again, if you want something quick and dirty, just add your operating costs, and that will give you an idea. Just know what's included in that number. Okay, but again, we're gonna look at the first level of record keeping today. We're not really going to be focusing on the balance sheet, but there's balance sheet templates. If you ever need that, you can contact one of us at the Farm Business Management team, and we can give you a template for your balance sheet, and we can really help you move to these higher levels of record keeping if you want. But today we're going to focus on our summary of income and expenses. I do think I have. So just the last thing I'm going to say on those higher levels is, if you want to move to levels 3, 4, what we help you with is writing an income statement, an accrual adjusted income statement, again, that aligns things and makes lots of adjustments so that you can get a true picture of your net farm income. And then we create financial ratios. The nice thing about ratios is that they allow you to compare, because they, get rid of the total dollar values. And so you can compare a very small farm with a larger farm, or, different sizes or types of farms are a lot easier to compare if we have their financial ratios. And there's, liquidity, profitability ratios, lots of different types. And we can calculate those for you. You can actually calculate them yourself too, and I'll show you. But and benchmarking basically means comparing. So once you have your financial ratios, then you can benchmark. You can compare yourself with yourself in past years when your farm may have been smaller. You can compare yourself with your own goals, or you can compare yourself with other farms, top farms, average farms in your area. And there's databases where you can get that information to compare yourself against from or to. Okay. But here. So we talked about our chart of accounts, that we may want our Schedule F or tax. We may want our tax accounts to be our guide in creating that income and expense list. We talked about our activities of record keeping. So we're going to come back into this space of, okay, how do I actually do this? And we're kind of going to focus on the first 3 steps here: classifying financial information, storing evidence, and making sure things are reconciled. So day to day, what do we have? We typically will be working with two different things: receipts and bank statements. This may not always be the case. If you do not have a bank account and you do everything cash, then maybe you don't even have bank statements. But for most people, you'll have receipts and bank statements, and you'll usually be trying to reconcile them, try to keep them in balance. But if you're first looking at your bank statement, it could be, I'm sorry, like I'm trying to highlight things and then I'm like crossing. If you are going to be basing your records on a bank statement, it could happen, and it happens, I think, from what I know with especially small farmers, there's a lot of cash transactions, and those will not appear in the bank statement. And we may or may not want to include them in our records, right? That's another question, but it's something to consider, right? And the same if we're going to be looking at our receipts only. Well, if all I'm doing is collecting receipts, there's information that I may be losing. What if I made an online purchase? I may not have a receipt unless I go to the, Amazon or whatever, and I print that receipt so that I can put it in my box of receipts or whatever. What if I lost a receipt? What if I didn't get one? So we typically will want to look at more than one thing to make sure our records are complete. And so this is cluttered, I know, but stay with me for a second. So there's two sides here. There's the bank statements and the receipts. And again, we're going to want to be looking at both of these, at least one of our receipts options and at least one of our bank statements options. Again, if I am going through a bank, if some of my transactions are going through a bank, if all I'm doing is cash, then no. But okay, people will typically look at their bank statement. This can be in the form of a PDF, or you can be getting it in the mail. And there's the reconciliation where we look at our list of transactions and our bank statement, and we make sure everything is included. But it may happen that my bank statement, again, does not have everything because I had some bank transactions, or I had some cash transactions, or or there may be things in the bank statement that I don't really know how to classify, right? It would be very easy to say, okay, well, everything I bought at the Tractor Supply store is, I don't know, supplies. But is that really always the case? Or could it happen that maybe one day I used my personal card instead of using my farm card? I just was not carrying my farm card with me. So that's where these things come in handy. A notepad can be a paper notepad, or it can be a digital text document. I'm always going to be needing to make annotations and make adjustments if I'm going to be basing my records on the bank statement. So if we continue to go down here, we'll look at the receipts list in a minute, but there's softwares that will take your bank statement, or that will sync with your bank statement. I'm sure most of you are familiar with this, right? But in case you aren't, these days, there's softwares that will take your bank statement and upload it into their software, and they will probably even categorize your transactions for you. So Mint is one that I really love. It's free. It is an Intuit piece of software, so it's the same owners as QuickBooks. And I think it's really good at creating rules where you tell it, well, every time a transaction is kind of like this or that, then it will be feed, or it will be seed, or whatever expense. I really love that about Mint. That's pretty much everything Mint will let you do, though. So I will typically want to export my Mint transactions, my categorized Mint transactions. So I let it do all of the categorization, and then I will download it as an spreadsheet as an Excel or Google Sheets spreadsheet. And that's where these two links down here come in handy. And we'll look at those in a minute. But before we do that, there's Wave. Wave is another free online record keeping system. It also categorizes transactions for you automatically. I personally like the way Mint does it better, but you may find that you don't really notice a difference. I've been using Mint longer, so that may be the reason I have a preference. But it basically does the same thing. The thing that Wave adds that Mint does not do, and that I really enjoy from Wave, is that it will let you attach the receipt, a picture of the receipt, to each transaction. So it will bring the information from your bank statement, and it will allow you to, again, do this where you make sure each transaction has a receipt attached to it. If you have a receipt that was a cash transaction, so it will not come automatically through Wave, you can add it on top of the ones that are being synchronized and brought directly from the bank. So Wave, in my opinion, is very complete. I really like it for a small farm. Yeah. The other problem with farms, but again, this is more for more advanced stuff, is that keeping records. Imagine that you didn't have a farm, that you had a hardware store. So you bought X amount of nuts and bolts and you sold X amount. So your income and expenses will automatically keep your balance sheet updated, right? If I owned this inventory and I sold this inventory, now I have X. And so basically, as your income and expenses get updated, and as you see, that can happen quite automatically, your balance sheet also gets updated quite automatically. Well, that does not happen for farms, because in farms, things just grow. And so you will always need to hand write or on a spreadsheet or a text document. You'll always need to make adjustments to your balance sheet from what your income. So basically your income and expenses are going to be one thing if you're a farm, and your balance sheet is going to be a separate thing. Whereas for other types of businesses, it really is more in sync. So that's the reason I'm saying that, is that as a farmer, sooner or later, you're going to need to use spreadsheets. If you're going to be writing a balance sheet, and if you're going to be moving on to more advanced levels of record keeping. So we're going to talk about these two are spreadsheets. But let me make a mention of QuickBooks. QuickBooks is great. QuickBooks syncs with your bank account. It lets you add other transactions that may not have come through your bank account. It lets you attach receipts. So it's very complete, and accountants love it. People love it. Everybody loves it. It's expensive though. If you're willing to spend, like I personally struggle with the fact that, well, I really think that I can do the same things that QuickBooks does with other tools that are cheaper. So that's where I struggle with QuickBooks, but it's great. Like I said, MSU, the MSU Telefarm Center supports QuickBooks. So I work with farmers that use QuickBooks, and it's great. It's easy, no complaints. If you're willing to pay the price, that's my only caveat. Okay, so something I've done for the longest time, and I think people may be interested in, is, okay, I've downloaded, you may know that you can download your transactions from your bank statement or from Mint, like I said, or Wave. And so what I tend to do is I download those transactions, and I then complete that to get that good picture of my of all of my accounts, my assets, my liabilities, and my income and expenses. So there's one for personal, one for farm. Basically what these do, I can show you, but basically the idea here is that you'll copy and paste an Excel file that you will be downloading from your bank or from Mint, and you can do this manually, or like I said, Mint will do this. If you've set up the rules, it will do it automatically. And so you can choose what account is money coming in from and what account money is going out to. And this is called a double entry record keeping system. There's also single entry. With single entry record keeping systems, you can only keep like one money account. So, you cannot distinguish what went through the bank and what went through cash or from a different bank account. So I tend to prefer double entry systems. I think they are easy enough to handle. You just need two columns. Where's money coming from? Where's money going to? But that's basically it. It's a list of income and expenses all in the same place. And then this will calculate things for you. It will just summarize all of your income items. And of course, this can be tailored to but it will put it in different months. It will make it total for you. You can do different things on spreadsheets. Then on the receipt side, if you're, instead of going to be looking at the bank first, again, like you always want to be double checking. Like if you start with the bank, you want to have the receipts be your like double checking. If you are going to start from the receipts, then you're going to want to use your bank statement as a like double checking. But many people will use envelopes. They'll have an envelope for different types of accounts or binders. That works at the end of the year. So the problem with that is that first, either you're going to have to put a lot of work in at the end of the year, or you're going to have to pay someone to do that work for you at the end of the year. And that can get expensive. And also it doesn't give you a good handle of your farm's income and expenses. But that works great. If you want to take a step further, then you can use a paper journal. This is the Farm Records Book for Management, and it lets you write down your income and expenses using just pen and paper. Then if you want to take a step further, you can use the same Farm Records book as a spreadsheet. And so same thing, you're going to be putting your income and expenses there in spreadsheet format. And if you do that, then the nice thing about the Farm Records book, and let me go there just a second, here it is, is that once you've put together your summary of income and your summary of expenses, it's going to calculate the financial ratios for you. So here at the very end of the Farm Records book, and all you have to do is put your income and expenses that you needed to do anyways for taxes. You're going to have to write a balance sheet too. So you would have to move to the second level, but then it moves you straight to the third level without really making any extra effort and without even working with one of us if you don't want to. Of course, a farm business management educator with MSU or a consultant can do this for you, but the Farm Records book does it for you automatically. If you're using it in the form of a spreadsheet. If you're using it on paper, it will still tell you how to calculate those financial ratios. If you want to do it by hand, it's of course easier if you use a spreadsheet. But okay. Then other tools. So PCMARS is a farm-specific record-keeping software. I mentioned it earlier because the Tell Farm Center at MSU provides support for QuickBooks and for PCMARS. PCMARS is a lot more affordable than QuickBooks. It was designed specifically for farms. It looks like an 80s, like I have it open right here. It looks like you're in the 80s. But other than the aesthetic aspect, it really works great. It's got great reports and it's easy enough to use. You have that support from MSU. I really recommend PC Mars. But another alternative is Total. Total is an app for your phone. There's tons of them. Total is just one that I happen to use. And the nice thing is that it's on my phone. So whenever I get money or spend money, I can just, so it's all manual, right? And it doesn't let you attach a receipt. It just lets you say, okay, well, I spent X amount. And so it's nice because it's quick. You have it on your phone. But then there's the where do I put my receipts question as well. And so this is a set of apps that would let you archive your receipts digitally. And the IRS is fine with that. If you toss all of your paper receipts, but have a digital copy, that's fine. So it's important to keep your receipts obviously separate from your personal pictures so that it's easier to find. You need to have like folders for your different categories. I have like a folder for the year, and then within each year, I have different folders for the different categories. Okay, so I don't want to go over my time, but that's what these four will do in different forms. I like this one. This one will let me snap lots of pictures one after the other. But then I need to categorize them when I'm on my computer. The other ones, for the most part, will ask you what folder you want to put the picture in each time. So that may be better, if you don't want to spend the time categorizing your receipts afterwards. Okay, and lastly, this is the record keeping form. So you can use that on the computer or on the phone. I like using it on the phone, and it's a Google form. So I just open it on my phone and it will, so basically what this does is it lets me take a picture of a receipt, and it will attach the picture of the receipt. It will send it to my Google Drive, and it will let me enter the amount from that receipt, the date, like a few pieces of information. And it will basically, so here's, I have it open right here. So this is what it looks like on the computer. Again, this is the same on the phone. It will let you attach a receipt, amount, date, your account, where money is coming from, and the account that money is going to. And it will create, which one is it? Here. So it will put together this list. It will give you a link to the receipt. Again, it will be stored on your Google Drive, and there's a way it will even create folders in your Google Drive as depending on what category you assigned here. So I'm sorry, some of this is in Spanish, but your accounts, depending on what account you assigned it to, it will put it on that folder on your Google Drive. So your receipts will be really organized in your Google Drive, and you will have in a spreadsheet form basically all of your transactions. And you can do this for things that you have a receipt for, or if you didn't get a receipt for some reason, you still can enter that, and then you can dig for the receipt later. So yeah, those are just some options, general overview.